Welcome to this episode of the Comstock channel. My name is Brian Hendrickson, and today I have Joe with us. Welcome.
Good afternoon.
Good afternoon. As a reminder, we are still accepting your yield numbers, so please keep those coming in. You can send them into report@comstock.com. Don't forget, we have more reports coming out this week. Wednesday, September 27th, the livestock and meat domestic data, broiler hatchery, peanut stocks and processing, potatoes and turkeys raised come out. Thursday, September 28th, the weekly export sales, fruits and tree nuts outlooks for September 2023. Egg products and hog and pigs come out. Friday, September 29th, grain stocks, small grain summary, agricultural prices, and peanut prices come out. So you are one of the writers for the Comstock Report, and one of your latest ones was over the exports. So let's kind of hit on what you talked about, starting with the grain exports.
Yeah, I feel like all the focus is on harvest and the supply side, and rightfully so. We got the sun coming out here again this afternoon, and I think farmers around me are going to be hitting it hard again into the evening, and certainly into next week. We've got an extended forecast that's really going to allow that. But I wanted to take a look at where we were on the demand side of the equation, knowing that it's been kind of a bearish storyline that's helped pressure prices lately. It's something that we're talking about in a bigger way here with wheat today and how those prices are making new lows. And it's something I think, deserves a little bit more attention. So we've got to focus on exports and how they're going to impact the market here going forward as soon as coming into the focus here with this Friday's grain stocks report. So we've talked about expectations for this Friday's update. Justin in the update yesterday noted about how the USDA can actually use this report to change acreage and yield. Well, it's quite the surprise there. But at the end of the day, these quarterly grain stocks reports show us where we've been in terms of usage too, because whatever's left over is a product of demand and how we've been utilizing these crops. And so we start with, look at the grain stocks update where we have a chart showing you get after the harvest. The new marketing year starts on September 1st. You get to December. That's when everything's been replenished. That's your highest stocks estimates of the year. Down into the next quarterly report coming in March, then to June, and then finally to where we're at here coming up for the September report, where old crop stocks are as small as they're going to be. And they're the stocks that set the ending stocks, which are also the beginning stocks for our new crop marketing year. So if exports have been running any better or any worse than expected, they can show up in these graphs and in these estimates that we're going to look at Friday.
So overall, why are these exports down so much, I feel like?
Yeah, several reasons. You look at, well, first where we've come from, where we've been in terms of sluggishness. We take a look at corn exports to date, for example. Now, these charts we show are new crop focused. So that's why you see at the bottom left that little line for the new crop that's just getting started for our September marketing year that just rolled over. But we compare it to the previous year's data and also to the 5-year average. Well, if you look at corn exports in particular, they seem like they're not that bad off, being down only 6% compared to where we were a year ago. So those have a lot of time to pick up again. But the issue is that we look at an estimate for USDA, seeing that our corn export sales will actually increase 26% this year. So we're down 6% to date, but our projection is for them to grow by more than a quarter from last year. So that's a lot to live up to. It would put us somewhere back near that 5-year average we show. On the soybean chart, we're talking about exports that are much below where they were a year ago. And part of that, again, the reason why they have not been so strong here lately is because China's not been a big buyer. We've got China having bought only about half of the soybean purchase commitments that they had at this point a year ago. And we'll talk about reasons why that can shift and be less bearish and more friendly for the market going forward. But for now, That's a trouble spot. We see that soybean export commitments are down about 34% so far compared to a year ago, when the USDA projects them only to fall about 10%. So we're behind on that. One final word, we don't have a chart for it, but wheat. That's getting into the market today, as I mentioned, because of this talk that Egypt, one of the world's top importers of wheat, is probably going to tap into Russian inventories for a big purchase. And so that's more of the same, where with all this escalation of the war in Ukraine and the disruption in the Black Sea, there's still not any follow through for upside on Russian wheat prices. And that supply is still being dumped into the market cheaply in a way that hurts our wheat exports. So our wheat exports are down about 17% for the year, with a USDA projection for them to be lower by 8%. So all in all, corn, soybeans, and wheat, they've got a lot of catching up to do when it comes to exports.
So do you think they are going to catch up, or do you think we're kind of we're close to the end of the year in January? I mean, I know we're in harvest, but do you think at all we'll be able to catch up, or
I
just
think I
kind of in
do.
that sluggish area?
Yeah, I think I do see reasons why these influences that have been negative can shift to become more positive. So we start with one of those reasons, China, and the fact that they've been buying in a bigger way from our competitors in South America, particularly Brazil. Now, Brazil's coming off of record corn and soybean crops. We'll see if they plant more acreage and can continue to increase volume, but the threat there is El Nino in a big way. Already causing some dryness in northern Brazil, some issues with flooding down in southern Brazil, and maybe on into Argentina this season. It's just more volatility potentially ahead that El Nino is causing for South America. And so we've got more share to earn back, I would think, going forward. And China can step back into the U.S. market, I think, here over the coming several months to flip that into more of a positive. The other issue here with El Nino is something that can particularly be beneficial for wheat, with the fact that Australia, one of the largest wheat producers, is really suffering from El Nino, with their crop expected to fall at least by a third this year. The other things that I think can shift more friendly are the war in Ukraine and that influence. As long as we've been competing with this cheap Russian wheat, they're not likely to grow as big of a crop as they did this last season. And unfortunately, I don't see any end in sight to that war, and only likely more disruption to the trade flows. So eventually we can get some demand shift back into the U.S. market. The other thing that could potentially turn from a negative into a positive is that the dollar starts to come lower after its recent rally. That affects our terms of trade. And if we could restore some economic confidence, it feels like that dollar can slide lower again in a way that improves our export potential.
So let's not leave out livestock in all of this talk. How are they doing in exports?
Yeah, the meat exports are really an interesting case study right now. We can see that with beef prices ranging some 20% or more above a year ago, that has faced some pushback from international buyers on the beef end. That's not unexpected. I mean, we've got beef stocks down sharply. We know about the supply side storyline and how bullish it's been. It's just the case that there's not enough beef to go around here, like some of those importers might like. Now, the positive storyline for exports is pork. Pork exports are on pace to have a record year again this year, whether it's volume or actually revenue received by our pork sellers. That's a real positive storyline here. So if beef could turn around here and catch up a bit with the way pork's doing, and the grain exports turn around as well, we've got a much more positive storyline going forward.
All right, that'll do it for this episode. Thanks so much.
Thanks so much.
For premium content, you can head over to the Comstock Report, and don't forget to hit that subscribe button.